You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are watching and hopefully listening to the Financial Survival Network. I'm Kerry Lutz. Today is 7/14/21. Well, if you've been following the financial news, you know that Wells Fargo, in one fell swoop, without any notice, without any consideration for what they were doing, simply closed or shuttered credit lines between $3,000 and $100,000 to millions of clients. There ought to be a law against this. Well, maybe there should have been a law against the credit lines from being opened in the first place, but that's a different story. And the government sits idly by. It's one thing if you give notice, but they know that if they gave notice, that everybody would go cash out their credit line. So instead, they take everyone by surprise, and this will have really some detrimental, deleterious impact upon millions of consumers across the United States. Well, here we have mortgage expert Debbie Bloyd with us now to explain the ramifications of this seemingly arbitrary decision. And if you've got a thought about it, if you've been burned by Wells Fargo, send us an email to kl@kerrylutz.com. And maybe some of you consumer attorneys out there should be thinking of class actions. Debbie, welcome back. And hey, hope you're not a Wells Fargo credit line customer.
Not anymore. We used to have some accounts there, but they weren't the best at customer service, and we see that continue.
Well, they're excellent at opening accounts that you never asked for, but they paid the price for that. What do you think is driving this? Because they didn't give any reasons.
No, they didn't. And I think that's the most concerning part. They didn't give people a chance to make other plans. So now what's going to happen is people have to rally and find a different way. This is really going to hurt the people in the middle. So the people with money don't have equity lines, or they just had it for a backup anyway. The people this is really hurting are the people that maybe don't have good enough credit to get credit cards and need that extra cash overage in case something happens. And this is going to have them rethink how they handle their credit.
Yeah. So the question here is this the first shoe to drop? Are other banks going to follow suit? I know you're pretty connected to a lot of different financial institutions. Have you gotten any wavelength, any feedback from any other banks who are planning a similar offensive?
Well, as a broker, I don't always deal with the public banks. I deal with a separate line of lenders. And those lenders are still very progressive, and they're still doing low doc loans and alt-A loans and bank statement loans. So that front is still going. They're only disclosing it. And of course, they charge a higher rate. The Joe average banks, Bank of America, Wells Fargo, any public place that you can walk in and bank are going to change the rules, I think. I don't think they want caught if they have a lot of mortgages coming up. With the forbearance coming out, we still don't know what the ramifications are. The government just lifted that in June and gave everybody, 90 days to get it together, maybe refinance their house, put those lost payments on the back end. Or I think we're going to start seeing foreclosures if people don't hurry up and make a decision on what they're going to do and how they're going to handle those missed months of payments. I think the lenders are also looking for a backup plan for that. They anticipate having some fallout.
Yeah. I'm just curious about the whole thing. Obviously, the banks have done just fine. They're awash in money. We see this because a year and a half ago, we had the repo crisis, and that's where J.P. Morgan Chase just yanked out $125 billion from the overnight lending window, and those were considered like no-brainer, easy loans, like the junior portfolio manager. He's in charge of she's in charge of the repo desk, and they just yanked it, and that caused a crisis. The Fed jumped in. Now we have the opposite crisis, that there's too much money chasing a limited repo potential there, which probably is a result of all of the money printing that has taken place, $1 trillion. But then you see Wells Fargo, they're awash in money, and they take this proactive step, if you want to call it that. And I think that banks are private entities and should act in the best interest of their own shareholders. But on the other hand, they are beholden to the federal government and the Fed. Everything they do is all the money they make is directly attributable to their connections there. And as a result, they've kind of got a trust. And how many banks have trust company in their title? That's not what it means, obviously. But don't you think they have an obligation to these millions of people to, hey, all right, so don't give them their whole credit line. Cut it in half, all right? Cut it 25%, 25%, 25%. Cut it back in stages. But to just shut them off, that's like, just shutting down the floodgates on a dam and waiting for the thing to overflow and collapse.
Right.
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has an excellent shareholder base with Ross Beatty owning 20%, insiders 5%, and Resource Capital Funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
I think they're trying to be preemptive. It's not fair, Kerry, to say those that you really need the money, you're not going to get it. And those that don't need the money do get it. So that's kind of the way the lending world works. If you don't have any money, you have no collateral. And these are collateral loans. A lot of these lines of credit are based on, prior commitments that they've paid off or collateral. And, in the mortgage business, I don't take collateral. We go off of your investments, your retirement accounts, and we go off of what you earn compared to what you spend. A lot of these companies don't want cut in the middle. And so they don't want to be caught with bad loans on their timeline, especially if they foresee, like I think it's going to happen. We're going to see some homes go into the foreclosure market because people just can't come to an agreement with their current lenders. You're going to see a lot of houses go up for sale, I think, because people aren't going to have any choices. And of course, do they deserve choices? That's a whole nother question. I'm pretty hard-lined and tough when it comes to if you can't pay your bills, then you shouldn't have it. And if you can't pay for your house, you probably shouldn't be in it. You need to downsize or sell. A lot of people don't feel that way. They feel they're entitled to the home that they're in. And a lot of people are really hanging on by a shoestring. I try to refinance people all the time that don't have enough reserves to make it 1 month, let alone 6 that is required. So a lot of people are just hanging on by the edge.
Yeah, well, it's interesting in the housing arena because prices have gone up so much that it should effectively bail out most of the homeowners who are in arrears. Either they sell and they have equity that they didn't have before. I mean, I know a person in California, she hasn't made a mortgage payment in 13 years, Debbie. And
How?
Yeah, and she actually has equity in her home, several $100,000 of equity. But there were many years where she had negative equity.
Right.
And they just seemed to be afraid to pull the trigger. They were ready to do it a year and a half ago, and then you know what happened.
Right.
We had the moratoriums.
I think it depends on what side of the country you're on, who your banking agency is, and who the servicer is, what they're willing to do. It's on a case-by-case basis. And I think that's where we're going to see the biggest thing. I think Wells Fargo, if they make a swoop like this, they have to go across all lines, all income lines, all equity lines. So if they say they're going to stop, they got to stop for everybody, the people that need it and the people that don't need it. They can't play favorites, so they just shut the whole thing down.
Yeah, that's just like pulling the plug. And it's one thing if they pull the plug on mortgages, they're not going to write any new ones. All right, I get that. The risk is already factored into their share price, and it's already been factored into all of their financials. So do this just seems pretty outrageous. But I'm with you. Like, hey, if you can't afford the price of the ticket, or like a wealthy guy I used to know who said, asked him, how much does it cost to fuel this yacht? And he said, if you got to ask that, you can't
afford it.
Right?
Exactly. Well, a lot of people are looking for a bargain in the real estate market right now, and you're not going to find very many. They're going to be few and far between. A lot of people that are screaming the loudest, it's everybody right now. It's the people that can afford the $1 million houses that have competition. It's the people that can afford the $200,000 houses. Everybody wants to save money. Everybody wants the most they can get for the least amount. And everybody wants a little bit more they can afford. I have a couple that have been looking for a house in the $1.5 million range, and they've decided they just need to go to $3 million. $1.5 million just isn't going to do it anymore. And so everybody wants a little bit more than they can afford.
Yeah, well, one of the key ways to build wealth in this world is living beneath your means. All right. And that means that at the end of the month, you don't have zero in the checking account. You got money left over.
So many people don't, Kerry. So many people are right at the edge, or their money is all in their 401k that they can't touch without great penalties. And that's the only savings that they have, is the forced savings from their job.
Yeah, well, there's a saying for like Boca Raton, Florida. That's kind of the epitome of what you're talking about. All cash, all flash, and no cash.
Exactly.
I've been in that life before, and believe me, it's better to live beneath your means. Well, Debbie, really appreciate your coming on. Just tell us where we find you, how we connect with you on the web.
You can find me at dlbmortgageservices.com. You can find me at moneystrategieswithdebbie.com. And all of those websites have my phone number, so you can just call. I do loans primarily in Texas, but I can help you with your finances in any state.
All right, great to know. And of course, got a question for Debbie, send it to kl@kerrylutz.com. We'll forward it to her and get you an answer, and sign up for our free newsletter at financialsurvivalnetwork.com. Debbie, always a pleasure. Thanks so much for coming on.
Thanks so much for having me, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.